Welcome back, focused learners. We're jumping right into another explainer today, and I am absolutely thrilled about this one. We're going to pull back the curtain on the invisible architecture that moves our money across the globe. I mean, we interact with it literally every single day, but honestly, very few of us actually understand the plumbing that makes the whole shebang work. So let's dive into this. Have you ever actually thought about what happens after you hit pay? You go to buy a coffee, you tap your card, and bam, approved. It takes what, a second? But that 1 second tap hides a massive, mind-bogglingly complex digital journey. In the literal blink of an eye, your data is encrypted, routed across the world, verified, and settled. It feels like magic, but actually, scratch that. It's not magic at all. It's an incredibly orchestrated, high-speed dance between software, banks, and specialized networks. Here is our roadmap for today. We're going to cover what a payment network actually is, clear up the confusion between gateways and processors, look at the massive B2B payment challenge, explore the virtual card solution, see how we're fixing cross-border payments, and finally, wrap up with the future of these networks. Let's get to it. Section 1. What is a payment network? Let's talk about the global infrastructure. Okay. At its core, a payment network is the global infrastructure that connects buyers, sellers, and banks so they can securely authorize, clear, and settle digital transactions. Think about it like a giant digital highway system. Your money is the car, and these networks are the high-speed, multi-lane interstates that allow it to safely travel from point A to point B. Without these highways, modern commerce would literally instantly grind to a halt. And this brilliantly illustrates the foundation of it all, the classic four-party model. You've got the cardholder, that's you, the merchant you're buying from, the acquirer bank that receives funds for the merchant, and the issuer bank that gave you your card. But here is the real secret. There's an invisible fifth element in the middle, the payment networks themselves. When we ask what is a payment network, we're really talking about titans like Visa and MasterCard. They act as the absolute crucial connective tissue between all these banks. When you swipe your Visa or MasterCard, they instantly translate the data, check with your issuer bank to make sure you have the funds, and then guarantee the acquirer bank that the money is definitely coming. They set all the rules so that your transaction is just as flawless in Tokyo as it is in Texas. Section 2. Gateways versus payment processors. Time to clarify some serious industry jargon. So you'll constantly hear the terms gateway and processor tossed around, often interchangeably, but they do completely different things. The payment gateway is essentially your digital storefront. It securely receives your payment details when you type them into a website or an app, and it encrypts them. The payment processor, on the other hand, is the heavy lifting engine running in the background. It grabs that encrypted data from the gateway and actually routes it through those massive card networks we just talked about, like Visa or MasterCard, straight to the banks for authorization. So the crucial point is perfectly captured by the payment company Adyen. They have this brilliant analogy. Think of payment processors like postal workers. It just makes so much sense. The gateway is basically the secure blue mailbox where you drop off your letter. But the processor? That's the postal service, physically picking it up, sorting it, and routing your transaction data across the globe to make absolutely sure those funds land exactly where they need to go. All right, moving on to Section 3, the B2B payment challenge. Let's look at a massive inefficiency in this system. $1.6 trillion. That is the global volume of B2B, or business-to-business, payments. Just a staggeringly huge number. But despite this massive scale, the system moving it is surprisingly clunky. Businesses are out there still waiting on 30, 60, or even 90-day payment terms. They're dealing with manual invoicing and leaning heavily on completely outdated legacy systems. And you know who pays for those massive inefficiencies? We do. The costs eventually trickle all the way down to consumer prices. Now, what's really interesting and frankly a bit alarming about this slide is just how vulnerable these companies are because of those legacy systems. Look at the 2024 AFP Payments Fraud Survey. A whopping 63% of organizations faced check fraud. Yes, you heard that right. In 2024, businesses are still sending paper checks through the mail, and it is causing absolute chaos. You've also got ACH debit and credit fraud right behind it. Since B2B payments involve such huge sums of money, they are massive targets for bad actors, and the old-school methods just do not have the modern security required to protect them. Which leads us to Section 4, the virtual card solution. Finally, an upgrade from paper checks. Enter the virtual card. Now, what we're looking at here is a UATP virtual card seamlessly integrated right into a mobile wallet. But unlike the physical piece of plastic sitting in your wallet right now, a virtual card is a digitally generated, single-use, 16-digit tokenized number. Let's say a business needs to pay a vendor exactly $50,000. They just generate a virtual card, authorized for that precise amount, locked to that specific merchant. Once the payment goes through, poof, the number is completely useless. It literally eliminates the possibility of credential theft.
So how does the plumbing actually work for this? It's a super elegant 3-step process. First, the buying company's accounts payable department sends over a payment instruction file to their network provider. Second, that network generates the unique 16-digit tokenized virtual card and zips it over to the vendor. And step 3, the vendor's accounts receivable department just processes it like any standard credit card. Boom. Done. There's zero fraud risk, and the payment carries rich data attached to it, like invoice numbers, which completely automates the nightmare of manual accounting reconciliation. A total game changer.
Moving on to Section 5, Fixing Cross-Border Payments. Let's talk about moving money globally.
Okay, when you try to send money internationally, it almost never goes in a straight line from Bank A to Bank B. It relies on something called the correspondent banking system. Your payment gets handed off sequentially, jumping through a chain of 3 to 5 different intermediary banks. And with every single jump, you get opaque, hidden fees added on, data gets stripped or lost in transit, and you hit new walls of geopolitical and regulatory red tape. The whole thing can take days, and you usually have absolutely no idea where your money is while it's in limbo. To solve this absolute headache, we're seeing 2 very different philosophies emerge. On one side, there's the traditional heavyweight, SWIFT, which already handles over $100 trillion. They've rolled out SWIFT GPI, which essentially slaps a FedEx-style tracking number onto your money as it moves through those sequential banks, targeting a 24-hour delivery window. Then, on the completely opposite side, you have disruptors like Ripple. Ripple says, forget the sequential chain entirely. They use a decentralized blockchain network and their XRP cryptocurrency to confirm and settle cross-border transactions in literally seconds for fractions of a penny. So both are trying to fix the cross-border mess. They're just using fundamentally different architectures to do it.
And finally, Section 6, Future of Payment Networks. What exactly is coming next?
Let's look ahead. Juniper Research mapped out some trends for 2026, and it paints an absolutely fascinating picture. In the very near term, we're looking at agentic commerce. This is where AI agents will autonomously negotiate and make purchases on our behalf. That's going to totally reshape consumer habits. Given another few months, and B2B virtual cards are expected to see massive, widespread adoption, especially in complicated spaces like corporate travel. And looking just a year out, we might see stablecoins legitimately begin to rival traditional interbank settlement layers. The network is waking up. It's becoming programmable, highly intelligent, and instantaneous. Which leaves us with a pretty provocative question to chew on. As all these incredible technologies mature, will borders even exist in the payment networks of tomorrow? I mean, we started this explainer looking at a simple, everyday Visa or MasterCard swipe, and we've ended up peering into a future of completely borderless finance run on AI and decentralized rails. The invisible architecture of money is being rewritten from the ground up, and the implications for how we live, work, and do business, they're totally limitless. Thank you so much for joining me on this explainer today, and as always, keep your curiosity sharp.